Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 14th, 2023. Hope you're all doing well. In today's segment, we'll take a look at one of the most profitable option strategy, which is Iron Condor. Let's try to take a look and see how to make profit from Iron Condor. So many people wonder what the right strike price and what the right wingspan for these iron condors. We will demystify some of these concepts and identify how to trade these very profitably. Look, you got four major indices here. Starting from the top here, we got SPX, one of my favorite index option, and then you got NDX, which is great, and we got DJX, which is Dow Jones, and we got RUT, which is Russell 2000. One of the reason I love these index options is there's a very good favorability from a tax perspective. All the profit that you make will be considered 60% long term and 40% short term. So it's a great strategy and really great from a tax perspective. You don't need to pay so much money to Uncle Sam end of the year, mainly because it's a index option. There's a very good tax favorability. That's why I love these SPX, NDX, DJX, and RUT because of this reason. But if you are not trading these for some reason, you could go after corresponding ETF, which is the SPY instead of SPX, and you could look at um, QQQ instead of NDX, and look at DIA instead of DJX, and IWM instead of RUT. You could look at those also, but understand there's a very good tax favorability when it comes to these index options. Just by looking at this, you can see here I got here IV rank, which is really indicating the volatility. For SPX, it's 5.2. For NDX, it's 0.2, and for DJX, it's 31.1, and for Russell 2000, it's 57. And just by glancing this, I'm more inclined towards choosing RUT for my iron condor trade because look, volatility is very high. So when you really sell iron condors, you want volatility to be very high, so that way you can really get some good money, good premium. When the volatility is high, the premium is really high. That's why I love Russell 2000 at this time. So with that, let's also go into Thinkorswim platform right here and look at some more details. Look, I got a small screener here from Thinkorswim platform. I got SPY, QQQ, and IWM, which is somewhere here, um, as you can see here. And we got DIA also somewhere down here. Look, from a volume perspective, DIA has got very low volume. That's why I don't trade this very often. My choices are really SPY, QQQ, and IWM, and the corresponding indices. So right now, as you scan through here, we've got IV rank here. For IWM, as you can see here, IV rank is 23.88, which is very good. It's slightly high, but not super high. And if you look at SPY, it's 19.42. QQQ, it's a little lower, mainly because QQQ has been going higher of late. So you could choose either you could choose either IWM, or you could even choose SPY or the corresponding index options. Instead of SPY, it's SPX. Instead of IWM, it's RUT. So that's the quick backdrop here. Now what we'll do is we'll go into a quick slide to show the risk profile of a iron condor. Look, we got an iron condor here. So as you can see here, for iron condor, the direction is neutral. You want stock to not go up too much and not go down too much. And the implied volatility, you want this to be high. Look, we just looked at Russell 2000. Implied volatility is relatively high, and the maximum profit is the credit that you received. So it's really premium collection strategy or income strategy, and the max loss is the width of the spread minus credit received. So that's your max. That's the basically width of the spread, which is the max loss here. Width of the spread minus credit received. And look, we got profit target here. Typically, don't try to be a hero. Take, about 50% of the credit received is good profit target for an iron condor like this. And it's a very simple strategy. When the stock price is around $100, as you can see here, current price is $100. You basically sell a put at the lower, maybe around say delta 15 or even 20 for that matter, and you sell a call above the current stock price around delta 15 or 20, and you basically buy a put couple of strikes lower. I prefer it slightly higher. Don't try to choose just $1 or $2 strike wide strike. I recommend going after either $10 widespread distance between these two to be $10 or even $20 for that matter. That's where you can make most of the money. So I recommend that. So don't go for a very slim, wing span here. Go for a little bit larger wingspan. That will help you very much. So with this, this is the makeup of the iron condor, and from a research perspective, a lot of folks have done great research. I would give credit to tastytrade.com here. As you can see here, Tasty Trade has done some great research. They have compared the width of the wings. There is a $1 wide wing width, $3 wide, $5 wide, $10 wide, and $20 wide wing width here. And look, the moment you go into the higher wing width, say, here we got $20 wide. Look, your number of losers were much lower. It's 0.07%, for SPY 30 Delta and Condor held till expiration date. They have looked at 2005 to 2019. It's a great sample size, as you can see here. The moment you go into lower width of wings here, $1 wide wing, look, we are making a lot of loss here. The percentage of losers were high, and look, even $3 is not great. And as you go into $5 wide, it's pretty good. $6 wide, I think it's probably a type. Look, $6 wide is just 6%. The percentage of loss. But look at $20 wide. I recommend you to stay at either $10 wide or $20 wide. I typically love to trade these iron condors on the index options, minimum $20 wide. I might even go about $20 wide. For example, for NASDAQ, the minimum wing width is $25 in NDX. So I recommend you to look at $20 wide or higher, the width of wing in the iron condor, mainly because look, it's worth your while. That's a very high, very low percentage of losers. So with that out of the way here, let's go into thinkorswim platform again, and let's go back to this chart here. Just by looking at this chart here, we know we want to choose Russell 2000 mainly because IB rank is high. So with that, let's go back here to this chart and bring up, Russell. Instead of RUT here, let's bring up IWM, which is an ETF. We'll get some good statistics, and we'll apply this to trade. We will apply this to trade RUT. Look, by looking at this chart here, Russell is not doing much, basically trading sideways, mainly because there is a lot of worry about this banking All these regional banks are having some trouble here. That's why this is trading sideways. As you can see here, we got 18 months chart here, pretty much trading sideways. This is a perfect makeup for a iron condor type trade. That's why I love to trade the index products like IWM, SPY, QQQ. Those are my favorites. If you're looking at ETF, otherwise you could look at the index options, which is SPX for S&P 500, NDX for QQQ, and RUT for IWM. So with that, look, market is trading sideways here when it comes to IWM, and look, volume is pretty, it's pretty good volume here. RSI perspective slightly weak, as you can see here, and volatility, look, the current volatility, which is the green blue line here, it's above the historic volatility. That's good enough. IV rank is 24. I mean, it's not super high, but it works at this time. You could trade this. And from a MACD perspective, look, it's barely positive right now. The blue line is trying to go over the yellow line, which is a good sign here. So with this, we could look at a iron condor trade for IWM. So let's do one thing. Let's go here to trade tab here. We can construct a iron condor. And typically, look, there are various choices here. What I love to do is really, I love to look at a little bit higher time frame for these index options. So let's do one thing instead of IWM. Let's bring up RUT right now. So RUT, all right. So we got RUT here. We got 32 days out expiration. I would, you could choose 32 days out, but I would rather pick up a little bit longer expiration here, which is right here. Look, we got a quarterly here, 47 days to expiration. I would choose this one here because the premium is slightly higher as you go into slightly higher expiration. I would choose this one here, which is which is about 67. Actually, the one right here, which is 47 days to expiration. So with this, we could choose this one here, and so iron condor, as many of you know, is constructed using two call spreads and two put spreads. Something similar to the picture that we have seen here, right here. Look, there is a call spread here at the top. There is a put spread at the bottom. That's the makeup of the iron condor. And look, as long as the price stays between your short strikes, you got a short strike, that put option that you sold, and you got a short strike, which is a call option that you sold. As long as the price stays in between those two short strikes, you will make money. That's the great strategy. Lot of probability of making money here. That's why I love this strategy. So with that, let's go in here and construct the iron condor. You could go into delta, say around 18 or 20 on the on either side here. Let's go 1610 is good enough. Look, there's a very good look. There's a very good open interest in 1600. I would rather choose 1600 here. So you could go here and just go sell and say sell iron condor down right here, and now we got a nice picture here. So you could say 1600 on the on the short put side of the house. Look, we got put right here, short put, which is a -1 is short 1600. And when you want to buy back here, you could buy back maybe say 20 strike here. Let's go to 1580 here, which is a $20 wide spread here. Look, 1600 and 1580, that's a $20 wide spread. And on the call side, we'll do same thing here. Let's go around, say 12 delta here, which is good enough here. I don't want to be, sometimes, these ETFs go up. That's why I want to be a bit careful on the call side. That's why I'm going to around, say 12 delta here. 12 delta puts us at 1880, as you can see here. So on the short call side here, let's go to 1880. All right, let's go down here and 1880. There you go, 1880. And we'll buy back here 1900, which is a $20, beyond 1880. So let's go to 1900 here. There we go. We got 1900. Look, we are making it about $440, which is good enough money. And you could you could go and confirm and send here. Or before that, let's do one thing. Let's look at the probability of success on this one here. You can go here and say analyze trade in thinkorswim platform. So you could go here. I got a lot of things going on here. I will basically remove all these things here and go into my last iron condor, which is the one that we are doing right now. Look, we got nice looking iron condor here. And we'll also do one thing here. Let's look at probability of let's set the slice to break even, as you can see here, and 7-1 is the expiration date plus 1. Let's choose that, and we'll also go right here on top here, and let's choose this one as 7-1. That's the Saturday after the expiration date. Look, we got a nice looking picture here. It tells you what's going on here. Look on the top, just to go to the explanation here, there is a 66.12% chance of you making money, because look, that our break-even points are right here. There's one break-even right here, which is 1595. That's this break-even here, and we got one more break-even on the higher side here. That's 1884. As long as the stock stays within these two short strikes here, within these two break-even points, we'll make money. That's the probability of making break even. That's 66.12. And probability of losing money is, on the lower side it's 14.99, and on the higher side it's 18.89. So low probability of losing money. And look, this blue color diagram here, it's really profit and loss at probability of break even at expiration. You should pay attention to this blue diagram here, whereas the purple one here is really as of today, what's the chance of making money. That's this purple diagram here. As you can see here, payout is more at the expiration here than the today, which is just just maybe one day past, or just today, which is not too many days past after we place the trade. That's why you don't see too much profit on this one yet. As day passes, this purple line will kind of coincide. It will start going up and coincide with this blue line here, and you will see payoff here. So this is a quick diagram here, and look, you got here your break-even points for today, which is on the purple line. You got your break-even points for expiration day, which is much wider break-even. So that's why I love this strategy. And for the folks who are you might also wonder what is the gray here. The gray zone here is really one standard deviation probability range, which is 68.17. You kind of see the one standard deviation move by looking at the gray area here. So many folks may not be very comfortable with this whole analysis tool, which is thinkorswim. I recommend you to look at one of my favorite tools, which is optionstrat. So in optionstrat, typically what I would do is really, as I look at the optionstrat, I go to flow tab just to get some good idea. You could go to flow summary. So in flow summary, you could do a lot of great things here. One of my favorite ways, really, I don't like to trade options on small cap stocks here. It's not good, on a long-term basis. You might have one or two winners, but you'll have a lot of losers. So if you want to trade stocks, I would recommend going into just large cap names here. Just click off here, go to the large cap names, and you could look at these names here. Look, we got a few great large cap names. Look, we got on the negative or the bearish side, we got a few of these signs stocks here: ExxonMobil, Google, and so on and so forth here. On the bullish side, we got Meta and so on and so forth. These are good leading indicators on what stocks can trade. For options trading. Today we are looking at ETFs. Let's click stocks off here and go to ETFs. Look, we got ETFs right now. Look, just by looking at ETF after getting battered, looks like IBM is showing some sign of strength here. So you could, you could go into IWM. And look, we got SPY right here. Let's see, SPY is showing some, weakness here. It's down slightly, as you can see here. So with that, let's go into build here. You could click on build, and you could go into iron condor. So we are really selling our iron condor. So you could say, let's go here and see here. So we got all these iron condor strategies. This is good enough. Let's go into neutral strategy, which is iron condor. It also gives a nice picture, as you can see here. As long as the price is in between two short strikes, you'll make money. Let's go and construct this iron condor. Go to option strat. We got here RUT here. Let's choose RUT, Russell 2000. And as you can see in our previous picture here, let's go back to trade tab here. Look, we are looking at, let's go here. We are looking at 1600 and 1580 on the put side. Let's go here to the put side. Let's go all the way to 1600, right there, 1580 on the buying side here. And on the selling, short put here is 1600. There we go. We constructed this side. And let's also change the date here. We are looking at June 30th here. There we go. On the call side, we have looked at 1900 and 1880. 1880 being the short call here. Let's go to 1880 short call here. 1880, let's say 1880 right there. And we are buying back 1900. Look, we got our trade right here. And we could alter this diagram a little bit. Let's increase the range here. Look, that's our iron condor, as you can see here. I love this option strat mainly because it gives a very clear idea. If you're not comfortable with Thinkorswim platform, this is a very good visual idea. Look at the vibrant color. It kind of tells you off the bat what's going on here. Look, we got $1,440 credit that you receive for selling this iron condor. Your max loss is 1560, and your chance of making money is 73%, which is pretty good here. Chance of break even is 73%. And it also tells you the break even ranges here. Look, we got two break evens here. On the lower side, it's 1595, as you can see here. On the higher side, it's 1884, as you can see here. As long as the stock remains between these two lines here, you'll make some money here. And these iron condors will benefit, as the implied volatility reduces a little bit. It will be much better for these iron condors. The key is to put these iron condors when the volatility is high. That's when you get some good net credit. And also, as volatility is high, you can basically go moneyness perspective. Your short strikes will be far away from the current stock price as the volatility increases. That's why I like to wait for the volatility increase. And increase of volatility happens when the stock market crashes. So that's when you kind of look for a 100, 200, $300 drop in these indices, especially Dow Jones. When you see the news, hey, Dow is dropping 200 points, that's when you go in and put in an iron condor, for QQQ, IWM, or even RUT, which is index option for us, Russell, NDX, or SPY. It's a very, very good strategy here. You can make some good money here. And folks have researched these index products like SPY, QQQ, and RUT, and the corresponding ETFs. It's in general, for these ETF products or even corresponding index products, because there is no earnings risk, there is no acquiring or acquisitions, there is no bankruptcy. these stocks tend to do very well for a delta neutral iron condor type strategy. You could execute this day in and day out and get a great credit. So in general, I want to take you back to this quick slide here from tastytrade.com here. Don't try to go after very low wing width here. That's not worth your money here. I would say don't go here. I would say big negative here. Instead, always go after a little bit wider iron condor here, like say $20 wide or even wider than 20 is always preferred, but I would shy away from $1 wide, $3 wide, even $5 wide iron condor. I would shy away from this because you will end up holding for a longer time to realize your profit. And look, your percentage of percentage of losers is typically high, so I would go for a little bit higher probability of profit. I would go with either $10, $15, $20, even $30, $50 widespread. That will make you great money here, and you don't need to worry about all this stock news. You could tune the news out here and trade this comfortably. So with that, let's go back here, pick out our trade. You could confirm and send this trade here. This also tells you very nice view here. Look, if you see here, your max profit is $440 and your buying power effect is 1561, not too much. It's a great strategy here, and I would go after these type of strategies. Look, if you look at what I've been doing, this is one of my small account here. Look, I got a lot of RUT here, as you can see here. We got RUT when it comes to butterfly. I have a butterfly in RUT here. I got various vertical spreads here in RUT. So it's a great one here. I also have some iron condors in SPX and NDX and Tesla, as you can see here. All are making money. If you look at my SPX here, look, I got a lot of iron condors in SPX. So the reason I love these strategies really by looking at this here, look, um, you know, in this iron condor here on a daily basis because of theta decay. Look, there's a nice $94 of money that I'm making here, and in the butterfly, look, there's $11 every day, and in the vertical spread, about $78. This is a smaller account in around say 30K account here. By looking at this in the 30K account, I'm making about say $160 per day passive theta decay, which is a great strategy. I would say much better than many strategies. It's a consistent winner. So I would like to take this 30K account into 100K, say by end of this year, and probably even more than that. We'll see how it goes. And typically when the volatility is super high like this, you could sell these iron condors and make some money. So with that, thank you very much. Happy investing and trading. Please subscribe.